Oh, hello, hello, hello. It is Monday, November 17th. Man, time is flying by, guys. How's everybody feeling about the markets right now? Been a little bit ugly. Not gonna lie. Um, Actually, our deep in bags aren't doing too bad. Some of them are actually slightly up while everything else is just getting destroyed. Man, rough times, rough times. If there's any indication, this is one, right? Fear and greed is down at 11. Woof. It was at 14 yesterday. It's 10 the 2 days prior to that. This is actually, since I've been looking at this, I think the longest streak and that's that low that I've ever seen. So things are certainly pretty rough at the moment, man. This is something to keep an eye on. I will say though, okay, the bottom I think is getting pretty damn close, guys. I know I haven't really tried to make any predictions about this recently, just because there's so much uncertainty, but there's plenty of reasons right now why I think we might be working through some of the stuff that really started October 10th. Let's be real. The government shutdown kind of put a wrench in things, I would say. And then we had the October 10th liquidation event that some funny business definitely happened there. But there's a lot of things now. Liquidity is kind of coming back to markets. I think we're getting on the other end of this. The CME gap is closed. We're going to talk about that as well, what that means. You probably see a lot of posts about that. CME gap, got to go fill it, blah, blah, blah. So we'll talk a little bit about that today. We're also going to be talking about the deep end projects that I'm going to tell you what I've been adding to. Actually, I've added to some positions. Looking at this fear and greed index, guys, like I did add to some positions throughout the summer and in fall. I've been aggressively actually deploying stables over the last week or two since things have been showing extreme fear. And I'm going to tell you which projects I've been buying the dip on. Obviously not financial advice. This is what I'm doing. Doesn't mean that's what you should do. And I still have some stables that, I'm kind of staying patient, right? And I'll tell you what, patience is really important, guys. It is so important. We're going to talk about that a little bit more too. One of the things I want to bring up though, so don't download. Oh man. I haven't downloaded it, but there is a widget for this one specifically for if you have an iPhone. There's a widget you can install. So I have it on my home screen. So it's as soon as I open up my phone, it reminds me of how fearful everyone is every day now. It's a lot more fun when it's greed. We haven't seen that in a little while. One of the things I want to bring up, though, and this is something I covered a couple weeks ago, I'm actually going to edit that part from the live stream out and post a video on my channel covering this. But guys, if you haven't checked this out, I highly, highly encourage you to read this. I know I told Tyler about this as well. It's talking about Bitcoin's silent IPO. I'm not going to go through all the details again, but I am going to edit that and post it from the live stream a couple weeks ago. But it really talks about the OG whales and how this year we've seen this changing of hands. And Jordy Visser here, he calls it the Bitcoin silent IPO. But it's basically the first time that Bitcoin whales, the long-term holders that have been holding over a decade, have had the opportunity to actually sell without crushing Bitcoin. And he talks about how it's actually a healthy thing, but that's why all this buy pressure we've seen, we kind of had to work through this period here. But I think we're getting to the point now where the buy pressure, we're going to start actually seeing it because these OG whales only have so much supply, guys. And I think we are going to see it really reflected in the price. By the way, while everyone else is, panicking, everyone's fucking panicking all over the place. Look at X timeline. Everyone's like, oh, it's ending. I was just in a space. Peter Schiff was talking about how Bitcoin is going to zero. He always does, right? But guys, other people, smart money accumulating. Harvard now owns $500 million worth of Bitcoin. It came up in their recent filings. So it says that they have more than $442 million in BlackRock issued ETF, IBIT. Also, it does go on to say that this is more money in the Bitcoin ETF than they have in any other stock, including stakes in NVIDIA, Microsoft, and Amazon. Pretty wild. They have a $57 billion endowment. Holy shit, man. But their largest holding, Harvard. And it was not long ago that Harvard was basically like poo-pooing on Bitcoin, okay? This came out today, too. Strategy purchased another 8,178 or $835 million worth of Bitcoin. Everyone's like, well, how come it's not like showing in the price? Turns out that this purchase didn't happen today. Okay, so this happened between November 10th and November 16th, according to their 8K filing, 8K filing, and not AK. And it says they now hold 649,870. Their average price, so this is important. Their average price is 74,433. For roughly $48.4 billion. One of the things people need to keep an eye on, though, is MicroStrategy trading at a positive MNAV or not? If they get to a negative MNAV, will Michael Saylor be forced to sell? That's the question. So far, not. So far, that dude is buying. Okay, buying up the dips, and he is not the only one. This was posted like an hour ago. There's been a lot of these posts recently. They're like, oh, like so-and-so, Drake bought $600 million of Bitcoin. It's like, I look it up and the motherfucker only has like a net worth of 400 million. Like who's posting this stuff? This though, I double checked on. El Salvador did buy the dip. Okay. So this is their president here putting this post out, but actually I looked into this. You can go to this website here. It's bitcoin.gov.sv. And it shows El Salvador's holdings. So they did purchase just over $100 million today, guys. So that's a pretty big deal because their total holdings before that, well, it's like 588. So that's a pretty big percentage difference. So while everyone is freaking out, people are buying, guys. There's a lot of people buying up the dip. You also have JP Morgan out here talking about how, they have a new floor of 94K. Well, that didn't age very well, did it? But they're holding $170,000 Bitcoin target. Originally, at the end of the year, they're saying, look, that we're getting very close to a floor here where the risk is very limited downside. Is what JP Morgan's analysts are saying here. They say that the upside projection is 170,000. Based on a volatility adjusted comparison between Bitcoin and private sector gold investments. It does say the timeline has been pushed out though a little bit. So originally they're projecting 165,000 by year end. Guys, I think a lot of us, including myself, really got caught off guard. The government shutdown really fucked things up. And then that October 10th Black Swan event, obviously no one could see that coming. That washed out a lot of leverage and a lot of money out of the markets and really caused some liquidity issues on top of the government shutdown. And I think that has really pushed out some of the timelines on this stuff. So, the big thing is always to zoom out. You think about all the catalysts that have happened this year that are still happening. Like, it is important to keep that in mind, as brutal as it is right now. But one of the things that we might be seeing a bottom here, this guy's been pretty accurate with his analysis. He talks about the CME gap. Okay. So the CME gap essentially is, when you look at publicly traded, when you look at exchanges, right? So the Chicago Exchange, for example, they close, right? They close on Friday. They open on Monday. They close every day. When you have crypto that trades 24/7, especially over like a weekend, sometimes you'll see from the time like the Chicago Exchange would close on a Friday, there's a huge price action over the course of the weekend. So when the exchange opens on Monday, there's this gap. If Bitcoin moves a lot over the course of the weekend, what we've seen is that these CME gaps, is what they're called, get filled. They tend to go back. You tend to go back in time. You tend to fill these gaps. And we've seen this now on multiple occasions. We saw this back. We had this huge gap here that we ended up filling, right? So this was back earlier this year, I believe. So we went up and we ended up filling that gap. And here we are again. We had this gap right around the low 90,000s, and that got filled today. So this is something that you probably see a lot of posts about the CME gap. This is what the Chicago Exchange. So that's all that is. So that is filled now. So there's a lot of people that are thinking like, hey man, this could be a case where we're getting close to a bottom here. There's a lot of different indicators though that would suggest that. but the main thing, I think, looking at the macro side of things, is like we saw a complete shit show in October. Binance fucked up. There's no doubt about it. And I don't care what they say. Wintermute, I think a lot of big players got messed up. I think the banking systems had a lot of liquidity issues with the government shutdown. And I want to talk about that a little bit. So, looking at some upcoming catalysts. Number one, quantitative tightening is ending. Okay. Is ending on December 1st in like 2 weeks. So this is the balance sheet right here. So what you'll see is in a quantitative easing environment, they will purchase treasuries. That pushes liquidity in the markets. What we've seen really since 2022 is that we've been tightening. So what they're doing is they're letting these treasuries run off the books, but they're not replacing them. So this is liquidity that has essentially been pulled out of the market. And when you think about this, going from $9 trillion down to $6.5 trillion, that's what $2.5 trillion of liquidity that's been really pulled out of markets. We're getting to a point now where this is no longer going to be runoff. Okay, so at least it'll stay the same. I would imagine that very soon we'll start to see quantitative easing start. Jerome Powell doesn't want to do it because he hates Trump. And yeah, I get it, man. If I were Jerome Powell, I probably wouldn't like Trump too much either right now with all this stuff that he's had to deal with. But I don't think they're going to have a choice. We're seeing dollar shortages. We're seeing liquidity issues. So I would expect that we're going to see QE starting. The very least, it's going to happen when Jerome Powell's term is up in May. So we should expect that we're going to see an expansion here, and then adding to their assets. In other words, holding more treasuries. That pushes liquidity into the markets. So that is a good thing. And when you consider that we've seen the type of price action with Bitcoin that we've seen during a quantitative tightening environment like this, that's pretty impressive, guys. That's very impressive. And all the OG whales that have been selling, and all those things considered, it's actually shocking we are where we are right now with the price of Bitcoin. When you put that context in. Now imagine once we see QE start, that's very good for risk on assets. And I would expect that Jerome Powell, when he's out in May, they're going to put a Fed chair in there that's going to be pumping markets. Okay, we're going to see QE in full effect. And there's one other thing I want to mention that's going to be happening next summer too. But the other thing I want to call out when we talk about the bank liquidity issue, this is the general account. So essentially, this is money that's been building up in the treasury. You call it kind of like a checking account, if you will. This is liquidity that couldn't go out into markets because the government shut down. So you see their checking account essentially has been building up. We should start, now that the government's back up and running, we should start to see this liquidity get back out and flow back out into markets, flow back out into our banking system. So this is nearly $1 trillion that's been sitting in this account. You can see here we are down to $300 billion. So that's like $700 billion liquidity that should be moving back into markets. So this whole liquidity crunch we've been experiencing through October, on top of the bullshit with Binance on October 10th, and then all that coinciding with the 4-year market cycle and everyone like, hey, man, it's over. Panic selling, all that. It's been tumultuous to say the least. But I think that we are probably close to turning a corner here, especially from a liquidity standpoint. Okay. The other thing, Fed rate cut in December, that's looking less likely with 55% of a no change. I think a lot of this just has to do with the fact that the White House is basically saying, oh, we don't have the numbers. We don't have the reports, the CPI reports, the job numbers. Jerome Powell already came out and said, hey, like, we're not going to fly blind. Like, if we don't have the statistics to back it up, then we're not going to make a change. I believe they're going to want a rate cut. The White House is going to want a rate cut in December. That means that they're going to have to push some reports out and force Jerome Powell's hand. I think they're just holding off right now. They don't want to worry markets. CPI already is not looking fantastic, okay, based on reports. But you notice Trump's already getting rid of a bunch of tariffs on like grocery prices and on different food items. I think they're trying to get CPI down. The other thing is I think the job market probably looks like shit. We haven't seen any reports in quite a while because the government shutdown. I think they're waiting. They're waiting to release those numbers. So it kind of is very closely tied to a rate cut. So we don't have like 3 weeks of people freaking out about the job market. So that's how I kind of see this playing out. We'll see. We'll see what happens here. The good news, though, if we do see a rate cut with a 55% chance of no rate cut right now being baked into markets, that's a lot of upside potential. If we see a 1/4 point cut, the markets right now are not expecting that. So that would be certainly upside. Now, as we get closer, we'll see. I think we'll see these numbers shift quite a bit as we get more information. But as of right now, the markets are not baking in a rate cut. It's more likely that we don't see one. What about the Clarity Act? This is the crypto legislation. This is another thing that's not expected to happen this year, 24% chance. Brian Armstrong has made some comments recently that this could happen this year. So 24% chance. I would say it's very likely it'll happen early next year, if not this year. But 24% chance on Poly Market. If you look at Kalshi, they're sitting at a 31% chance. So a little bit of a difference there. Either way, it's something to keep an eye on, right? And it seems like they are making progress. That's another thing that could be a potential catalyst. And then the last thing, this is something that has been coming up a lot. I don't want to play this clip. This is about the tariff $2,000 check that everyone's been talking and raving about.
Millions of dollars in tariff money. We're going to be issuing dividends later on, somewhere prior to, probably in the middle of next year, a little bit later than that, of thousands of dollars for individuals of moderate income, middle income. We're going to pay down debt. We have a lot of money from tariffs.
Okay, so for all the people that were like putting out these posts, $2,000 checks going out by the end of the year, is not happening, y'all. I mean, I don't know why people expected it to move that quickly, but it is very coincidentally very likely to go out sometime, I would say by early summer. Now, why might that be important and maybe timed that way for a reason? Well, guys, the midterms are coming up next fall. And here's where I think we could see a bounce here. Okay. We've seen things so oversold. Extreme fear to this extent is crazy. Alts have been incredibly oversold. So I think that, like, not all alts, but I think there are alts that are going to pump before next summer. Okay. Let me just make that clear. But I will say this much: going into the midterms next year, Trump knows what's at stake here. If the Republicans lose ground in the midterms, there's going to be moves for impeachment 100%. And Trump knows this. You better believe they're going to be pumping the shit out of markets next summer leading up to the midterms, guys. They're going to put a hawkish Fed chair in there that's going to be willing to turn on QE, cut rates, do whatever it takes. They're going to be sending checks out to people. Y'all, like, if that's not an environment for risk on, and then you look at, Raoul Paul has been talking a lot about the business cycle and how we've had kind of an extended contraction. We're about to move into an expansion on the business cycle. Things are certainly coming together for a perfect risk on environment. And I can see it now. Like, you're going to have the people that are like, the 4-year market cycle's over, and they're going to round trip. They're going to claim victory here, because maybe we do have an extended down period. We might have some pumps along the way. They can say whatever. People are going to be able to say that it's a bear market or whatever, and they're going to be like, well, it's a new cycle. The 4-year cycle's over. The 5-year cycle, people are going to be like, see, I told you it's a 5-year cycle. I don't really fucking care. All I know is that I believe that things are coming together. I don't think we're going to stay in extreme fear for a whole lot longer. Not to say there's not more downside ahead, but I believe we are getting close to a turning point here. And history would say as much. Now, if we look at Bitcoin, moving over to some crypto stuff here, let's see if this is accurate. I think it's a little bit lower now. We're at just over 91,000. So we closed that CME gap. We've been holding here. We'll see. We'll see what happens from here, guys. When you see extreme fear in the markets like we have, things tend to bottom and turn around. Okay. But it can stay that way for an extended period sometimes. Generally speaking, too, as we move into late November and in December, those are normally pretty bullish periods. Granted, October normally is too. It was down. I think we know why that happened. When you look at Ethereum, sitting at just over $3,000. Guys, I'm not really adding to the majors right now. Alts are actually, I think right now the risk reward on alts is better in my opinion if you're holding quality alts because they've already been beaten down all year. I mean, they have moved down in market cap so much. Many of them right now, like the revenue they're bringing in, can easily justify the market cap they're sitting at. You look at something like Ethereum that's sitting at a $364 billion market cap. That's a long way that thing can fall, in my opinion. Now, I'm not saying that's going to happen. Bitcoin, same thing. I'm more bullish on Bitcoin than I would be on an Ethereum at this point. You look at Solana, it's been absolutely ugly. If you look at market cap, we let's look at the year. We hit a new all-time high, at the end of September on market cap. But ever since then, the October events that took place rushed all of our momentum. We were on our way to really have a very solid end of the year here, but October was absolutely ruthless. Now, this is something to keep in mind with Solana is that they have 7% emissions per year. So they're expanding their supply constantly. So even though we saw an all-time high in market cap, we did not see an all-time high in price, right? So that's something to keep in mind with Solana. But one of the things I do want to pull up is, one of the big catalysts that we were waiting on was these spot ETFs for Solana, and those all got delayed because of the government shutdown. We had like one or two go live. We have a number of these now going live. The Fidelity Solana ETF is slated to launch tomorrow. This is easily the biggest asset manager in this category. BlackRock to this point has been sitting out on Solana, by the way. But this is the biggest spot ETFs to launch so far. We have a bunch that are coming, though, a lot. So that's going to get really a pathway for institutional money to come in. Now, whether that brings in massive inflows right away or not, I don't know. The macro environment's still a little shaky, but I do believe that we will see massive inflows into Solana once liquidity gets better in markets, once people get more risk on. It's just a matter of time. All of these things, it's the foundation being laid for institutional money to come in. So when the environment improves, you better believe that money is going to be coming into these assets, guys. Now, generally, again, fear is when it's a good time to buy, but at the same time, you don't want to catch a falling knife. DCAing is so important. I'm going to talk about that as we move over to the depend side of things here. Bitcoin dominance, by the way, has been dropping. We saw this get all the way up to over 65% over the summer, and we've kind of seen a downtrend. So part of this, I think, is, Bitcoin has had a pretty solid year overall. I mean, it hit new all-time highs. We're now back to where we were at the start of the year, actually a little bit down. Alts, though, have gotten really crushed this year, aside from a couple of the majors. So I think that alts at this point, it's like a lot of these smaller caps, it's like, I don't know how much lower things can go for some of these projects. Now, there are some alts. If you're holding on to alts that are super speculative, meme coins, guys, like those can go to zero, 100%. But if you're holding some of these ones I'm going to cover here, where you have revenue now that can support the token, that's a whole different ballgame, right? And I think that we're going to see some of these really shine and during these market conditions. We've already started to see a little of this with Helium, guys. So if you look over the last month, since they, on October 18th, when they announced that they were going to be doing open market buys, they were at $1.82 back then. Guys, we are up. I mean, everything else has gotten absolutely annihilated over the last month. Helium, since making that change, has been able to absorb the selling and been able to absorb the fear because they have revenue supporting their token. So you imagine when things get better and you start having actual buyers come in, that's freaking massive, man. So this is huge, guys, for it to be up that much from $1.82 up to $2.26 and really weathering this storm. Fucking huge. This is worth bringing up too. Helium's official YouTube channel here posted this today with Aoki, another one of our favorite
robots
projects.
Need connectivity. They need internet absolutely everywhere. We can tell you in 3D space where the empty shelf is, or tell you in 3D space where the spill is on the floor. This is the future of human-robot interaction. The human and the robot need to be in the same coordinate system. China is already shipping the robots. They're for sale. I have them. I have more than one. Like, you can buy them. GPS is about as helpful to a robot as a fax machine is for a modern startup. Like, it's just not something that the robots are going to rely on.
All right, everybody.
So that is worth a watch, guys. It's about 35 minutes, but it is that, Helium is now working with Aoki. As we are seeing the real projects really rise to the top, and a lot of them are working together now. And it's a lot of the ones that I've been really, really hammering and been very transparent about cutting some of the projects that just haven't been performing and consolidating into a select handful. Really robotics themed, Helium with telecom because of the change they made to their tokenomics. You got GeoNet in there, and I'm going to run through the rest of these. But guys, we are seeing the real projects, really the top tier projects working together. And I love to see this with Helium and Aoki really pushing things forward. And speaking of Aoki, this is one I mentioned earlier that I bought the dip. So I actually, when we got down, we saw any time right now when we're in extreme fear in these projects I have a lot of conviction for. If I see a big wick down like this, a big sell, I've been scooping it up. Now, this is where the patience part comes in, y'all. And this is why DCAing is so important. It's something that I've had to work really hard on and I've gotten so much better at. In the past, I'd be doing research on these projects and I'm like, man, so excited about Aoki. I just did, 40 hours of research in this project. This thing is going to go crazy. I love everything about it. And I just want to full port it, right? Let's try to have like 10 grand or 20 grand I want to put into this project. As opposed to in the past where I would just full ported with Aoki, I have been deliberately DCAing. Okay. So I even had some, I'll be honest, I had some purchases that were back here at like 2.1 cents, right? If I had full ported there, I'd be pretty pissed off right now. Like, honestly. But what I did is I had a certain amount of allocation that I wanted to put into Aoki. I knew there was fear in the markets, but I started DCAing. So I made a purchase here. When we dropped down here, I made a purchase here. I've been DCAing, made some purchases down here. Today, just in the last 24 hours, I made a couple more purchases. When I see something like this, though, like a candle like this, a big sell-off with extreme fear in the markets, that's when I've gotten a little bit more aggressive with my purchases. But by doing so, my average cost of entry is much, much lower. And I feel very confident personally about where Aoki can go in the future, much higher, in my opinion. That's my opinion, not financial advice. But that is the beauty of DCAing. And you know what? It could have gone the other direction. Maybe if at 2.1 cents, things jumped. Maybe it doubled in price. And I'm like, man, I should have full ported back there. But you know what? DCAing works the other way too. You can DCA on the way up as well. The big thing for me, though, is when there's fear in the markets, DCAing in. When you see a greed in the markets, it works the same way on the way out. Things are getting overheated, DCAing out. And as we get further up that greed index to 90 plus, that's when it's time to be more aggressive in taking some profits, taking some money off the table there. But again, patience is key, guys. And I'm actually pretty proud of myself, man, because it is so hard when you get excited about a project not to want to full port it. And I'm thanking myself, though, every day because my average cost of entry is so much more attractive than it would have been if I had just full ported back here. Let's talk about GeoNet. And GeoNet and Aoki, by the way, have also been posting a lot about each other recently. So you're seeing the top tier projects collaborate quite a bit. GeoNet announced they're doing their first ever batch of U.S. manufactured mining stations. So they've been reacting to the tariff situation. So pretty cool to see there. You look at GeoNet. This is one that I haven't really been adding to a lot recently. I think I did add a little bit. It dropped to like 10 cents recently, I want to say. I did add a little bit in this range, but I've kind of hit my goal on how much geode I want to hold. I have a pretty substantial bag in GeoNet. I've been a huge believer for a long time. So this is one that like I'm not necessarily adding to necessarily. Like we saw like a huge drop back down to 10 cents or something, I would add some, but I'm pretty happy with my holdings there. And now I'm just, patiently waiting because I know what the long-term vision is for this project. I know every June they have a halving event. I know their revenue is going in the right direction. They're getting close to being net deflationary. I put a video out about this on my X profile recently. So I feel very confident where GeoNet's going. I'm very happy with my bag right now. And now I'm just kind of playing the patiently waiting game for market conditions to get better. They put this out earlier this evening on their Discord. So they are partnering with Tashi. So they've got their GeoNet and Rover. Hey, man, I'm going to talk about Rover again a little bit more here in a minute. But they're going to talk about Tashi, TGE. So Tashi is doing basically getting into decentralized servers for gaming, but also getting into robotics. I've had Ken on my spaces before, and very solid project, but they're going to be partnering with GeoNet. So that's pretty cool. So they're going to have their TGE coming up here, I think, beginning of December. So guys, check that out. It's in the GeoNet Discord there. Speaking of Rover, your friend Andy, so I actually connected them, but he interviewed the Rover team. And I have to say, on the X timeline, I'm seeing Rover getting some attention from some pretty big accounts. And it's nice they have that crossover with GeoNet. So I think, as GeoNet, the price kind of improves with market conditions, I think you're going to see that Rover should benefit from that, guys. And when you look at the Rover token, sitting at under 1 penny right now, this is another one that I added to my bag, I think yesterday. So probably right around here. Let's see here, last 24 hours. So it's probably right around like 9.7 cents. So it hasn't moved too much. This is another one that I added to my bag because the market cap's so freaking low. And I think the upside is massive, guys. Like they're providing data to train autonomous vehicles. This is going to be a multi-trillion-dollar industry that really hinges on this data set. And there's a lot of people out there that would be like, oh, like LiDAR isn't necessary. Like Tesla doesn't use LiDAR. Bullshit, man. Tesla used LiDAR data to train their original models. So even though they don't have LiDAR equipped on their vehicles, they still relied on LiDAR data to train their models in the front end. So LiDAR and what Rover's doing is incredibly important. And their partnership with GeoNet is massive. And when they're the biggest robotics sector to move. The first one that's going to move to a multi-trillion-dollar industry is autonomous vehicles. So love what Rover's doing. Low cap. That is another one. Aoki and Rover, I bought the dips on both of those over the last week. I have been a little bit aggressive recently in deploying some stables, man, with this downturn in the market. And again, because I think we are getting close to a turning point here. I want to play this clip. I had this is for 375 AI, by the way, guys. You guys know I'm a huge fan of their project. This is Harry talking about their total addressable market and revenue goals. This is from my space that I hosted. Let's see. I guess this was probably about a week ago. What do you think the total addressable market is? I mean, this is obviously a new data set. You're going to keep expanding, but I mean, do you have revenue goals for, the end of next year and 2 years out, 3 years out, or what are your thoughts behind that? Because it's obviously massive.
Yeah, I mean, forecasting revenue is difficult in a market that's number one huge and number two new. However, there are proxies of which to go by, and Tyler brought up a good point that 80% of commerce happens offline, yet there's also almost no information about what's going on offline that's of any kind of fidelity to that of what you get in the online world. The online data business is worth hundreds of billions, and therefore if you did the math and said that we could get equivalent information in the offline world and it's 5 times bigger, then the opportunity is huge. Over my career, I've sold hundreds of millions of dollars of data, digital data, and certainly anticipate scaling to to 9 figures of data sales revenue that's recurring, and that's that's what we're doing this for. And again, back to the earlier point, we're here for the long haul,
guys. I can't keep beating this drum any more than I already have, but it's one thing for someone to be like, we're going to scale to 9 figures of revenue. He's done it before. He's sold data. He's done it before, right? You also have he's talking about the total addressable market, like 17 or I think it's about 18% of commerce is done online. That total addressable market for that digital data is, he said, a few $100 billion. It's like, okay, if you extrapolate that over the other 80%, you're talking about $1 trillion total addressable market. I mean, he's talking about scaling to 9 figures of revenue. I absolutely think they'll get there. But here's what we need to look at here. Okay. Total, or the market cap, $10 million right now. Okay. I was talking to Tyler about this. I'm like, dude, if they are hitting, let's say 50 million in revenue, if a substantial portion of that is going to open market buys, it's not like a valuation that you would see in a stock, right? Where, let's say the revenue is $50 million. Well, then you could justify, let's say $100 million market cap. With the open market buys, because of the liquidity and the buy pressure on the token itself, you kind of have to throw that valuation model out. We're talking about much higher. Okay. And that is what I think we need to wrap our heads around. We haven't seen, Helium's the first one we're seeing that's hitting like really substantial revenue and doing open market buys. And it's going to be a really good test case to see like how that impacts the token price. We've already seen a pretty drastic change in the shittiest market conditions ever. But all I have to say, guys, I've made it now one of my largest holdings. I continue to buy the dip. This is another one that I have. This is the one I've been most aggressively buying the dips on. Okay. So if you look at the last week, we had a drop the other night. It was like 5 a.m. This thing, there's like, I looked at the on-chain activity, like one whale sold like a huge bag and I swooped that shit up at, 3.7 cents. And I bought a little bit on the dip today. I'm going to keep doing it every day because right now I think it's just undervalued. So this is one that, I am looking to continue to add to. And keep in mind, the early investor token price, there's really 2 prices to keep in mind here. Early investors, that $10 million investment round is at 5.5 cents. So we're below that still. Those tokens are locked for another year anyway. The initial public sale was at 7.5 cents. So we've seen some major resistance as we got up to that 7.5 cent mark. So 5.5 cents, 7.5 cents are 2 numbers to keep in mind. But like for me, I'm looking at this as a long-term hold anyway. So I don't really care. I just know that this is egregious. The market hasn't figured out what they're doing, in my opinion, and what they're capable of doing and what they're going to do. So that is one, again, I'm continuing to add to aggressively. A few that I want to throw in there for you guys. Rice AI, this is a robotics company. They're in the same office now as Aoki. Super low market cap. I think some of these robotics companies that are really low market cap, these are going to age really well when we look back. Okay. But sitting there right now at just a 3.73 million, and even fully diluted is only at 17 million, guys. And they're working directly with Aoki. So the next one is Ex Machina. They haven't had their TGE yet, but go and follow them, guys. I know I've brought up Brandon a lot in prior live streams. That guy's been like nailing things, shorting the market, went along the market. He has just hit every single major trend this whole year. He's pulled a lot of profits out, and he's investing in the robotics markets and private robotics markets. Ex Machina is a way to do that. So their whole model is essentially raising capital, and by pooling capital, it'll get them in the door to invest in a lot of private robotics companies. Whereas if you were an individual investor, you'd have no freaking chance, right? So this is one I think is very interesting. So they're pooling capital to get into robotics capital markets. Y'all, I can't say this enough. if you thought, AI, if you're like, oh, I'm kind of missed the opportunities on that, or maybe you capitalize a little bit, this is the next rotation. Robotics is the next rotation. And I have no doubt in my mind, like AI is going to continue being a big thing, but it's going to merge also into robotics. But this is where the next wave of capital is going. This is what you need to be paying attention to. All right. You look at their website here. You can click on, let's see here. You can click on get Deuce here. So that's their token. That'll take you to this next page. So opt in for auction alerts. Basically, they open up auctions where you can invest, and then when they have their TGE, you get tokens. So I would say it's worth looking at. I'm not saying just go in willy-nilly invest, but they've had 3 or 4 different waves so far. Their first one was actually peak. Now they're doing it with USDC. So they had wave 1.5 was 500,000. The next one was 1 million. Wave 2, wave 3 was just completed at 3 million. So they've had no problem raising capital. But if you want to get in on this project, you opt in for auction alerts. Doesn't mean you have to invest, but I would recommend doing that, guys, so you're alerted when the next wave opens. And at that point, you can, by then you can do your research and decide. But I think this is a really smart idea by them, and a project needs to be on your radar, in my opinion. And then lastly, I'll leave you with this, guys. Tomorrow morning, bright and early, 9 a.m. Eastern time, 8 a.m. my time. I'm going to be on the Deep in Coffee Hour. We're going to be going through in more detail all these robotics projects. So that is going to be the theme tomorrow morning. I'm going to be on there with Neil from Havelo. So yeah, we're going to be talking robotics tomorrow morning. If you can make it, awesome, man. It will be on live. And that's what I got for you guys tonight. I know it's a little late night episode here, but I appreciate all of y'all. If you could retweet, make sure to follow me on YouTube as well. I'm actually editing a 375 AI video right now. I've got some videos I'm going to be posting here within the next couple days on my channel. So there are things I get on there that don't get on X. So make sure to definitely follow me on there as well. And y'all have a fantastic night. And for those of you that joined tonight, I really appreciate each and every one of you guys. Peace.